Somewhere right now, a warehouse worker is loading a truck with pristine coats. The tags are still attached. No one has ever worn them, and no one ever will. Every step of this haul was scheduled and signed off on by a corporate headquarters. The truck bypasses the discount outlets and the charity donation centers entirely. It is heading straight for an industrial incinerator. Think about the last time you found an amazing deal on a clearance rack. You probably felt like you won something. Somewhere, a brand decided that letting you win that discount cost them more than lighting the jacket on fire. The internet's favorite explanation for this behavior is the tax write-off. The logic goes that companies burn unsold clothes to claim a massive deduction and come out ahead. This chart shows how that deduction actually works. When a company writes off unsold inventory, the government ignores the high retail price. The deduction is based strictly on the tiny fraction it costs to manufacture. Selling that same coat to a liquidator or donating it to charity produces a better financial return. On paper, burning it is the absolute worst option on the table. If setting fire to your own products makes zero financial sense on paper, these companies must be protecting an invisible asset worth far more than the inventory itself. To a luxury executive, brand equity is a tangible asset on the balance sheet. It is the carefully crafted illusion of exclusivity, and they are terrified of diluting it. If a premium coat ends up on a massive discount rack for a few dollars, consumers learn that the brand isn't actually worth the premium price tag. That kind of knowledge destroys their ability to charge top dollar. There is a second, equally dangerous threat created by having too much leftover inventory: the black market. When genuine overstock floods the secondary market, it creates chaos. Counterfeiters use that chaotic supply as cover, easily blending their fake items right in next to the real surplus. That pristine coat is incinerated to protect an artificial price point and a brand signature. You, as a consumer, never actually asked to pay for either of those. In 2018, Burberry admitted in its own annual disclosures that it had destroyed over $37 million of unsold products, perfume, accessories, and iconic coats in a single year. The detail that sparked widespread anger was who got left out. Burberry's very own shareholders, the legal owners of that inventory, were never given the chance to buy the excess goods before they were hauled away. Customers who had paid full retail price realized their money was essentially subsidizing the destruction of the exact same goods. The public backlash was immediate and intense, forcing Burberry to reverse its policy and promise to recycle or donate goods going forward. Burberry only became the center of this scandal because they disclosed the figures. Their annual reports exposed a practice that functions as standard operating procedure across the entire industry. Destruction is really just the cleanup crew for the root problem. Brands operate on a business model where making far too much product on purpose is cheaper than trying to accurately predict what consumers will actually buy. Anywhere from 10 to 40% of garments made this year will never sell. Whatever escapes the incinerator is absorbed by massive landfills. Governments are finally stepping in. France passed the AGEC law in 2020, and the European Union is drafting rules that legally ban the destruction of unsold clothing and electronics. While these regulations stop the literal fires, they only treat the disposal method. The profitable core engine at mass overproduction keeps humming along completely intact. This playbook of manipulating supply to manufacture desire reaches far beyond the fashion industry. You see the same mechanics in your everyday consumer frustrations, from artificially scarce concert tickets to limited sneaker drops. When shopping sites flash an alert that says only 3 left in stock, they are using this exact illusion of exclusivity to pressure you into a sale. Next time you rush to buy a limited edition drop, ask yourself, how much of that scarcity is real, and how much is engineered by a company willing to destroy its own products just to control your wallet?